So what do I have here on this daily chart? I've got the uptrend. Make sure you have your look back, which is November to November on a daily chart, so 1 year. So I've got the uptrend. I've got the bounce off the uptrend. It's following through. Crude oil is down, which in essence weakens the loonie versus the US dollar, or strengthens the dollar versus the loonie, giving me a little bit of strength. There's been a double top at 3,000. That was actually a pretty decent little short up there at 3,000. Little M pattern or double top pattern. And that rejection at 3,000 is what sent us down here to the top line of the wave, triggering a potential buy. Okay, that's what's there. Also consider that the crude oil market has to be part of this whole COMDOL conversation when it comes to the dollar Canada. So top line of the wave is your entry. And what am I looking for here? I sure as heck wouldn't mind a bounce up to 2,500. I'm long this market right now. Have been for a little while since it bounced off the top line of the wave. But simultaneously, what's happening in the 30-minute chart? I've got a fairly fresh downtrend working here. So one of the questions that you're probably bound to run into is what happens when you have multiple setups on the same time frame? Which one do you go with? Well, here are the considerations, because it's not an easy take this one answer. It's not an easy answer. The answer has more to do with your own risk tolerance, your own time frame preferences. I mean, those are obvious ones. You know, your daily chart trade is going to entail more risk and more reward than a 30 or 60-minute chart. So if it's a risk tolerance question, that's fine, but does the market really care what I can tolerate as risk, or is it just going to do what it's going to do? I think we all know it's going to do what it wants to do, and my tolerance for risk has zero application in where the market's going to go to next. So the much more important question is, which one's a better setup? And the way I determine that is by understanding that I know larger time frames, most especially the daily chart, is psychologically more relevant than any intraday chart, really than any other time frame, period. You know, just like double zeros are the most important psychological number, just like 200-period simple moving averages are the most psychologically relevant moving average. Well, in terms of time frame, the daily time frame or end of day is the most psychologically significant, important time frame. That does not mean it's going to have the best trade necessarily for that pair at that time. It just happens to be psychologically the one that people are going to watch the most. Psychologically relevant should not be confused with having the best setup. That's not always the case. But here's the rule of thumb. If all things are equal, in other words, the angle of my swings on another time frame or the quality of the momentum trade or whatever it is, let's say the setups are all really good across 3 or 4 different time frames or 2 or 3 different time frames of a single pair. The last determining factor, again, already having determined whether all things are equal or not, because if there is a setup that is much better than another, well, then that one should win. But if all things are equal, go with the larger time frame. So if you're comparing a 30 and 60-minute chart, they both are equally good, go with the 60. If you're comparing a 60 and a 240, both are equally good, go with the 240. What if the 60 is slightly better than the 240? Go with the 60. In this situation, I think that your daily chart is not only psychologically relevant, I think it has a slightly better setup. But let's say all things were equal and I'm looking at the swing on the 30 and the swing on the daily. They're 2 different directions, aren't they? Go with the daily. Again, look for the one that is the best. It's a qualitative question to begin with. Then it becomes a psychological question. Is one time frame more psychologically relevant than another? And nobody trumps a daily time frame. That is psychologically the most important in any market, mind you. Okay?